So here's a pretty wild stat to kick things off. Did you know Australian real disposable income has dropped nearly 8% since mid-2022?
That's not just wild, that's historic, literally the worst decline on record. And meanwhile, median house prices keep rising. Feels like the scales are completely off balance.
Exactly. Median dwelling values are up 8.5% in the past year and rents by nearly 10%, but income only up 2.8%. It's like trying to catch a train that's already halfway to the next station.
And the platform's on fire, especially if you're in Sydney. Mortgage serviceability there is now eating up 62% of household income.
That's brutal. National average is already over 50%. It's like housing went from being a goal to a survival challenge.
Yeah, and people are coping by stretching their loans, interest-only repayments, partial payments, even debt consolidation. It's not just about owning anymore, it's about not drowning.
And then there's the fixed rate cliff. Over 880,000 households refinanced between late 2023 and mid-2025, moving from ultra-low to rates that are up by 2.5 to 4%.
That hit monthly repayments hard. Some jumped by 65%. It's no wonder we're seeing mortgage arrears climbing.
Arrears over 90 days hit 1.43% nationally. WA, NT and outer suburbs of Sydney and Melbourne are feeling it worst.
Which makes sense. Those are the regions that saw speculative buying during the boom, but now they're the first to crack under the weight of higher repayments.
And banks aren't taking it lightly. Serviceability buffers are still at 3%, cashback deals are gone, and lending standards are tighter.
Plus, APRA's watching like a hawk. They've flagged high debt-to-income ratios. Still about 22% of new loans are over 6x income. That's spicy.
Meanwhile, what's going on with spending habits?
Cautious optimism mostly. Household spending is up a modest 3.7% YOY, but people are also saving more. Savings ratio rose to 5.2%.
It's this weird dynamic. People are still spending just differently. Less on goods, more on services and experiences.
And small luxuries, matcha acai bowls, boutique coffees, they're everywhere. Tiny indulgences to stay sane when the big stuff feels out of reach.
Honestly, it's kind of wholesome. If you can't afford the house, at least you can afford a lavender oat latte.
True, but it's also a sign of stress. People are self-soothing, like a national retail therapy but on a budget moment.
Shifting gears, what's your take on price trends?
Still going up, but not booming. Dwelling prices rose 1.7% in the first 5 months of 2025. Annual growth slowed to 3.2%, which is the softest since mid-2023.
But the mean price crossed a cool million. That's a psychological threshold.
Absolutely. And Brisbane surpassed Melbourne in house prices. Median now at $989K. That's a wake-up call.
Regional markets are thriving too. WA and SA especially, with 13.2% and 12.9% annual growth.
Toowoomba, Burnett and Springfield are buzzing. Affordability, lifestyle and infrastructure, all the right ingredients.
And interest rates?
RBA cut them twice this year, now down to 3.85%. Inflation's easing, CPI at 2.1%. But there's a risk that rate cuts could reignite price growth and worsen affordability.
So basically, damned if you do, damned if you don't.
That's monetary policy for you.
All right, so if you're a buyer or renter right now, what's the play?
Honestly, think long game. Save what you can, be strategic, maybe explore regions, and don't fall for FOMO. This market's not going anywhere fast.
Yeah, panic buying is so 2021. Today's vibe, survive, adapt, wait for your moment.
Or just buy a coffee and vent with your friends. It won't get you a house, but at least it's affordable comfort.
End of episode. Next time, are build to rent models the fix or just another fad?